gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Barr, and that has a nice sound to it, and Ranking Member Foster for holding this hearing today. I'd like to begin by yielding 30 seconds to my colleague, Mr. Lukemeyer from Missouri.
Thank you, Mr. Rose. Mr. Roy, I think we missed connections on our question a minute ago. The question was basically, we got too many bars around here is our problem. We got a Fed regulator named Barr, we have a chairman named Barr. Let's cut all that out. The Federal Reserve regulator is re-examining the U.S. bank capital regime and is looking to significantly increase bank capital in the United States. How would this affect your bank and its ability to service low and moderate income folks?
Increased capital reduces our ability to lend, period, whether it be low to moderate income neighborhoods or any part of our community.
Thank you very much. I yield back my time, Mr. Rose.
Thank you, Mr. Lukemeyer. I am concerned, Mr. Reuter, about the current Bank Secrecy Act process where the federal government deputizes financial institutions. I spent 10 years on the board of a national bank where I was tasked with looking at suspicious activity reports, as all bank board members are. And the lack of feedback that banks and other financial institutions receive on whether a specific filing was helpful in assisting law enforcement is extremely troubling. I've said it's like shooting at a target in the dark with a blindfold on. Mr. Reuter, how much money do you think your institution spends every year on BSA filings and related compliance?
I don't have the exact dollars, but I can tell you I have a 30-person team. That is all they do. And we do most of our IT in-house, and there's not a year that goes by we don't have 2 or 3 IT projects dedicated to AML BSA. And we would love feedback as to whether we're making a difference or not.
I imagine so, and that was certainly my experience as a board member. Mr. Reuter, is that typical of a bank of your size, do you believe?
It is typical of a bank of our size, and I think it's even more extreme in states that have higher rates of potential money laundering risk that are states that have more international activity.
And I take it from the answer you've already given that you're not satisfied with the feedback that you get from FinCEN or from law enforcement about whether particular SAR filings were helpful to them.
No, I'm trying to motivate a team, and I always say they're doing great work on the front line, so to speak, because they're playing a really key role, but some substantial feedback would even be more meaningful to them.
Mr. Reuter, last night President Biden mentioned junk fees in his State of the Union address. As you know, a junk fee is a made-up term by an overly aggressive regulator running a rampantly unaccountable agency. That's my assessment. I have previously asked Director Chopra in this room to define junk fees for us, and he filibustered, as we have all become accustomed to in this room. So, Mr. Reuter, has the CFPB ever given you a succinct definition of a junk fee?
No. In fact, it's quite confusing when the fees we are charging are clearly disclosed within compliance of the existing laws, that suddenly one person can interpret that a different way.
You testified that Congress should urge the CFPB to streamline its small business lending data collection and reporting rule under Section 1071 of the Dodd-Frank Act. Unfortunately, the CFPB does not streamline anything and instead harasses our banks and creditors. Moreover, Director Chopra has shown a lack of concern for the costs associated with his rulemaking. His staff estimates that the annual ongoing costs of this junk rulemaking will be between $372 million and $392 million. Mr. Reuter, do you believe that the increased cost associated with the 1071 rule will reduce competition in small business lending?
Absolutely. When you significantly increase the regulatory burden over a line of business, some banks simply choose, because it's not a big part of their strategy, to get out of it. We've seen that in the mortgage business. I worry we will see that effect with some small business lending if we're not careful.
Thank you. And again, Mr. Reuter, in October, the FDIC voted to raise deposit insurance assessment rates for banks by 2 basis points. The changes amount to a 54% increase in the current average assessment rate. Given that deposits are dropping and expected to drop further, what impact will the new assessment rate have on your bank?
Bottom line is it's increased our cost of doing business. There's less net income, which is less retained earnings, which is less capital to loan out into the community. Our deposits grew 42% during the pandemic. I think as an industry, we did an outstanding job of helping customers with their EIPs and the PPP. We were the #1 bank in the state of Colorado for PPP lending. And so as a result of that deposit growth, now it's going out, and we're still paying those higher deposit premiums.
Thank you. Mr. Chairman, I yield back.
Thank